And we're just going to give some folks a chance to stop in. We'll be with you in a moment. Good afternoon. Good afternoon, everyone. I'm Bagadan at Stock Market Academy. We thought we'd give you a view here. I know it wasn't scheduled, but we will do that sometimes. As the interest is there, we were getting a number of questions. We're trying to give folks an opportunity to patch in and ask their questions and to see Thank you. Thank you for those that have. And also there may be folks that see and hear this a little bit later today. Market, let's just take a peek at what's happening and what our members are seeing and an idea of what they might be doing. I can't possibly know because they are playing their own game, right? It's their time, their capital, their approach, and they will all do different things. I'll give you an idea of what they're looking at and what they might very well be doing. And I'll share with you as well what we're doing as well. So today is August 15th. It's Thursday. We're going to do this again. We're trying to do this at minimum Monday, Wednesday, Friday about noon and give you a view and a chance to ask questions for about an hour. Not going to be here for an hour today. I don't expect to be, but we'll give you a chance. This is a view of our Nicholas timing model, and we've been showing this the last couple of days. And the Nicholas timing model is running on a chart that has three different data streams flowing into it on the indices: the Russell, the ES, which is the S&P, and the NQ, and the Dow. And if you haven't noticed lately, I haven't noticed in the last 20 years, markets have a tendency to move all together, right? Yeah, the stock pimps would have you believe it's a market of individual stocks and you've got to make individual decisions and it's super complicated and yada yada, and only they can do that. It's horse sense. The markets have been commoditized, and what I mean by that is they move all together many times within hours, within minutes of each other, because the hedge funds just have big, big blocks and blocks of money, and they will just pour into, the asset classes, and they'll pour out. And so it moves the way a commodity might move, like oil, like gold, like lumber, like orange juice. It's a commodity. Now, if I was to go on CNBC and deliver that message, they would, get me the hook and pull me off. They wouldn't have anything to talk about, right? I mean, if they just come out and said the markets are commoditized and the markets flow up and flow down and it's all machines, then they couldn't sell the crap and they couldn't get all the stock pimps to come on and, and make a show. So they're all about making a show and making dough from selling soap or selling whatever it is. The person who came closest to saying something like that, to that effect, was a fellow by the name of Mark Haines. Mark, he passed away. He passed away shortly after 08 or 09, actually 09, I think 2010. And there was a time I kind of liked the guy because he was cantankerous and he would really give the stock pimps. Sometimes he would challenge them just to see them squirm. But, he knew, that it was, what he was doing was kind of silly, that it was all machined. So what is our machine doing? Our machine is looking at the data flow. So, and I'll just kind of type this out to you and give you an idea. So let me get a couple of things. So what we can do, and we can do this on a lot of different things, but this one in particular is kind of neat. And so we'll have a chart and we'll have a data stream, and we have three of them, data streams. And so the first one will be, as an example, the ES, the S&P. The second data stream is the VIX. And the third data stream is the yield on 10-year Treasury. And it was always interesting to me that one of the old, I spelled Treasury wrong there. I don't think it has an E on that. That doesn't look right. Treasury. Why is my spelling gone to hell in a handbasket? I used to be a great speller. That just doesn't look right. Treasury? No, it doesn't look right. Treasury. I don't think there's an E in there. let me before I embarrass myself, the nuns would have me by the cheek. Yeah, Treasury. No E in there. Okay. They would. Um, they'd grab you by the cheek and yank you around. Um, and okay, so it has the data stream of all three, and we do this. Now, when we started this, we were only interested in doing it with the ES, and we did a back test on it for years, and it looked really, really interesting. And what it was really interesting was it didn't. We went all the way back to like and we would go back year after year after year, right? And so all the way back to we had this idea, a mathematical idea. Susan wrote it, and let's look at it. So we look at it for the last year. I was like, oh, that's pretty good. Let's go back, go back, go back, and we go all the way back to 2008, and it was really, really good. And then 2007, we went all the way back to 2000. Well, between 2000 and we didn't go any further back than 2000. But between 2000 and 2008, beginning of 2008, 2007, it sucked. It didn't do shit. It was terrible. Like, wow. But something changed in 2008, and it's been great. And so I don't know, you know, maybe it's the Fed, maybe, they control interest rates. Control volatility, control. But it's been great. So when we started, we said, well, maybe we should plug in the NQ. And it was great, really good. Well, maybe we should plug in the Dow, and it was good. Well, not great, but good. And then we plugged in the Russell, and it was fair to good. Not great, but fair to good. I'm like, huh, well, that's kind of interesting. And so then we kind of we felt we felt as though we could get a little more of a heads up if we wrote a formula just on the VIX itself, which we did. And this is a classic case for those that are here, this most recent signal. Now, this signal, by the way, this is not intraday. It's a daily signal. And it will not trigger until the markets close and open for one tick at 6 p.m. So on August 8th, it says 5 p.m., but the market had to open at 6. It went short, the VIX. And the signals had all been, the market had all been long. Just want you to know that. Now, we have members that are listening, right? So I can't, I'm not bullshitting you. It was. And we did a nightly video. Our annual members have this tool on their desktop. Our monthly members get to see a video view of this at night. And so the short signal here was in place, had a high watermark of like 75 grand. It was only at that point, maybe up 30 or 40 still. I can't tell you exactly right here, right now. But what we did was for the nightly video, we said, well, with the VIX going short and us being in a short position, that's a natural position to be in. So that could be it is a warning, not could be, it was a warning. And it happened, I think, on I think it was a Thursday. Let me look. Yeah, it was right here. So we said to everybody, well, one of two things is going to happen. And all the time we've been doing this, they will not be all short or all long for more than 72 hours, usually much less. So what was going to happen within 72 hours? And so we painted our date on our video yellow. We shrouded it in yellow. Caution, everybody, caution. We're hitting some sort of an inflection point, we think. And I said to everybody, what's going to happen is within 72 hours, either this short signal on the VIX is going to go away and go long, and the markets are going to continue down, and we're going to be on a high horse and riding it down. Hi ho silver. Or the VIX is actually warning us, And within 72 hours, all four markets will go long. And we will now be in a confirmed long Nicholas, and we'll be underway on the long side. Just as we had said on the short side, I don't know how long we will be long. I don't know how high it will run up, but that's what it'll mean. Usually it happens within 24 hours. And when it does happen within 24 hours of the short signal, it's usually pretty significant. And that's exactly what happened. Now, to put on a mini contract for those that are not familiar with futures, we never, probably should, but we never short the VIX on a daily, certainly on a daily basis, and even on an intraday. I don't short it. I will buy it, but I won't short it. I just won't, because I don't want to be holding a VIX contract short and a plane hit a building. It'll be just, too bad. I mean, it'll be just too fast, and I don't want to do that. Although you can make plenty of money shorting volatility, right? But there are other ways to do it other than just going into a futures market. You can do it with options. You can do it, take the other side. You can do a number of things, but a raw short on the VIX, I'm not going to do. To go long these with a mini contract and to take it overnight would take considerable capital. Okay, because you got to have original, intraday, you only need to trade on the Russell, what about $1,200 or something? But to go overnight, 12,000. The ES, I think it's like 1,800 intraday, overnight 18,000. The NQ, 1950 intraday, 19,500 to go overnight. And the Dow, like 15, so quite a bit of capital to go overnight. I just want you to know that. But you could use micros. You could use micros to reduce your margin. So instead of being up, well, if you didn't want to mess with the VIX and you back off 6, you'd be, up about 30. Instead of being up 34,000, if you use micros, you'd be up 3,400. Now, what I was reminding our members who, they can patch in whatever they want on Zoom. We have a host. We have, quite a few monthly members and who can't see the markets day in and day out. And, doing other things and want to one day, but, maybe right now they can't. And what they're doing is they will, when the Nicholas fires, they go and get options. Now, I got to tell you, just on the last two signals alone, the short signal, who had a high watermark of 75 grand, and I've heard from a number of them, they did great. And they take their bread. They take their money, and then they wait. And then they got options long on this signal too. So you can do it that way. Also, though, you can say, if Nicholas is short, maybe I want to lean on the short side of my options. If Nicholas is long, maybe I want to lean on the long side of my options. What is Nicholas doing? Nicholas is purely math. It isn't using averages. It isn't using MACDs. It's not even using what Swing Machine uses, because it's not seeking trend. It isn't. It's not seeking trend or counter trend. It's doing something very unique in what we would refer to, we used to call it, or still do, like market vibrations. Maybe a better term would be market acoustics. And I'm picking up on that word from what not a good example maybe, but the assassination attempt, they were tracking the sound of the bullets, right? On that assassination, they were measuring the acoustic footprint of those bullets, which is a gross analogy. But this math that we've had now for a long time is really listening to the market acoustics, and it's really remarkable. I just can't tell you. There's nothing for me to point to. We can kind of get a hint, a little bit on the VIX. Sometimes it's shockingly good. Like, it's like, and sometimes it's just, I have to, even myself, I try when I do the videos at night not to give an opinion because I don't want to bias anybody. Because, there's sometimes you're like, man, we really gonna go from here? Are we really gonna go down from here? It's just, now it's not, there is no holy grail. It doesn't work every single time, but it works a lot. And we can glean a lot. I'm not going to get into the back test here, but we can put it on a back test. We can see how long the average signal lasts for. We can see what the average run up is of each one, the average run down. But it's pretty sweet. So I wanted to give you a glimpse. And now just the other day, it was, what at about 20 some odd thousand, and it dropped down to 18, 19. And now, of course, it's having a grand old time. Nothing intraday here that I can point to, though. We won't know until the end of the day. And this can fluctuate. There's a lot of leverage here. The signal may stay true until long, and we come in tomorrow and it could be at 30,000. So you have to know, and as traders, we're not going to get the very high and the very low on every single trade on every single day. That's not realistic. You are not going to, hit every single green in a game of golf. You are not going to make every single basket. Unless you're Steve Curry, right? Um, that guy, that's kind of crazy. That guy. All right, so I'm going to back off some of this, and once again, I just wanted to come up today and to show you. I'm going to remove some of these stars of what we're looking at and what's going on, and if you go back to the other videos, you'll remember seeing this, right? And you get an idea. It's really it's a beautiful thing. Let's go and look today at the fair gauge. We're still risk off, but it's caution. That's how sensitive. Now, this is Swing Machine plus interpreting the VIX for us. The VIX futures, 9-day, 30-day, 90-day, 6-month. It's still risk off, but it's risk off caution. It's saying, hey, if you're short and you got a bunch of short options there, you might still want to be hedging them. You might want to be thinking about maybe, taking them off the table. You're going to be well off your high watermark, if you had short options, and God knows we had some, and yes, we're well off of a high watermark. But we still have plenty of time to maneuver and hedge and do what we do. And let's go and we'll give you a view of the interest rates. So everyone's talking about interest rates right now. Here they are. The interest rates are starting to rise a little bit on the 30-year, 10-year, and 5-year. And so that's actually, we can definitely see we're seeing a correlation. Interest rates down, market down, interest rates up. Excuse me. I got to think backwards here. What we've been seeing, interest rates down, market down. Interest rates up, market up. We're seeing that. Now, that's not a correlation that is always true. So be very, very careful with any correlation. I'm not saying that's always true, but of late it has been. What we're looking at is the yield on the 5-year isn't 37, it's 3.7. The 10-year is 3.9. The 30-year is 4.1. So these are not inverted. They are not inverted, and they're nice and steep. And this is good for the banks. What isn't good for the banks is this one. This is 90-day paper, and it's at 5.0. And it's stuck there because it's controlled by the Fed. And that isn't good because the banks borrow short-term and loan out. So this is the bitch that is going to get cut. They have to cut it, or they're going to have a banking crisis. So they have to cut it. The market knows they have to cut it, and that's why it threw the hit, one of the hissy fits. So maybe the end of August, the Jackson Hole meeting, could they surprise something, or they'll talk dovish, and so the market is feeling pretty good that they're going to get a cut. But they're going to start to talk about, if they're not already, and I don't listen and monitor this, but but we were saying, when these things were pushing down, um, that is it going to be 25 basis points, 50 basis points? It needs to get under ultimately 3.7. Are they going to drop it so that it gets under 3.7 on September? No, they're not. No, I don't think so. They're not going to cut 150 basis points or even 100. I don't think so. They'll probably do a quarter or maybe 50. And the market will rejoice at that. They'll be happy with it because they'll say, hey, we got them where we want them. And the banks will be happy with it. But we will see. But it's looking, the right now they've done a masterful job, because if they can get that 5% below, 3.7, they're going to have a nice steep yield curve. And the market's going to yell, yay, everything's fine. So we could have a little bit of a rally of sorts. We could from an interest rate perspective. That's about all the Federal Reserve can do. But any other shoes to drop, anything else, they don't have any control over. And at this point, inflation is where it is and only going to get worse, in my view. So they've lost that battle. And so whoever comes in and is going to try to curtail inflation, you know, that's what they're going to have. I mean, they're going to have a lot of PO people. The stock market may be fat and rich, but the cost of everything will be going up. These. And you're already seeing, and now the Marxist solution to inflation is, well, the companies are ripping everybody off. So, we got a price fix, and we're going to fix the prices. So you can't raise eggs more than, 2 cents. And you can't, at the supermarket, we got to fix that. So the knee jerk reaction is that that's effective. And the knee jerk reaction is that it's good. That's terrible. It'll only bring shortages. It'll bring higher prices because they may not charge you for the eggs, but they'll charge you for packaging. Joe Weekend at Bernie's is now talking about federal, and they're all trying to get votes, federal legislation to price fix rent. That doesn't work either, because you can fix the price of the rent, but the next thing you know, they're going to charge you for a parking spot, and it's going to cost you $1,500 a month. Something else. They always get around it, but that's the knee-jerk reaction. Of course, there's no price fixing for government taxes, right? How about freezing taxes? How about cutting them? Forcing government to live on less. That's not going to happen, because God knows, and I'm going to go down a rat hole that I don't want to go. But of course, we need to have a bunch of terrorists, having a nice, May Day parade, with $1 billion worth of, military equipment, Apache helicopters. Wasn't that a beautiful thing? Oh my, why don't we use our own equipment to blow all that up? But so in any case, let's not go there. It is what it is. But you can see pretty clearly, and the Fed has a perfect view on this. So that's what they're going to try to do. Does it work? We'll see. Maybe in the short term. So things have changed a little bit. I do want to go look at that yen. Let's see here. I don't have the yen right handy, but of course, if that yen was to rise, but they chickened out too, so they're probably not going to do anything. And so let's go to Swing Machine. I know you want to see Swing Machine. I do too. Here's the yen. So the yen's a little weak. Yen was up to 0.69. She's weakened a little bit. Still long, 17 days, so she could, come back a little. But let's go to here's the intraday view. This is now this is crazy, right? This is absolutely crazy. Let's look at it, good and the bad. 11 days ago on Swing Machine, the 10 days ago, she went short. She had a nice run up, right? She did. She's still short, but she's ripping against that short and she'll be down 9 grand. You would be 9 grand if you hung in there, right? But you wouldn't want to do that. In Q, 16 days ago, she also went short, but she's ripping against that. You'd be down 11 grand, 3%, down. The Russell. So the dailies on now Swing Machine is picking up trend, and she would be underwater if you hadn't rung the cash register and hadn't disciplined on it. But this is where you can begin to act like a hedge fund yourself. Maybe you put on options here. Maybe you did. Maybe they're going against you. And maybe you did that for an extended period of time, days out, weeks out. And you'd be getting a drawdown for sure. But look on the 60-minute, you could come in on the 60-minute and maybe hedge those daily positions. So 118 hours ago, and this is where everybody's got to make a decision, what type of trader do you want to be? And how much trading do you want to do? And how much exposure do you want? What are your goals? You have to think that through, and we'll try to help you during the course of the Q School. But you got to think about that. You just can't be acting on the money like, oh, I want that. I'm going to trade on an hourly. I mean, because even here, they can go against you, right? We start you out very, very small, kind of chipping golf balls with a 9-iron, which is we're going to go to in a moment. But on a 60-minute, the ES went long 118 hours ago on the 8th. I don't have the clock in here, but probably it would be the precise time. And you'd be up 12,000 bucks on a mini. On a micro, you'd be up 1,200. 10 minis, you're up 110 grand on an hourly. Now, you'd have to be watching it on an hourly basis. It would take 2 to 3 hours for it to turn around. We mentioned back some days ago on here that we've seen hourly signals last for upwards of 2 weeks. So it's possible it keeps going. The NQ, 23 grand, 118 hours ago. That's when the bastards came in. Right down to the hour. That's when they came in. And they went after these guys up here. They went after them. The Russell, 5 hours ago. And then the VIX, look when the VIX goes short, 119 hours ago, which was 1 hour before these guys went. And they're going to probably keep doing this because they got these guys trapped, or whatever they were doing, the shorts. Anybody got short in what we call short in the hole, they're getting the head ripped off. Anybody getting long up in here could wind up getting their head cut off too. That's what the market does. Cuts off heads. Get too bullish, too bearish, one side or the other, but stochastics alone will get you whipsawed and cut up. You can't really, and you can use whatever you want, but I don't like stochastics. All right, so let's run over to our swing and you can say, well, you know what? Maybe I don't want to trade on an hourly because I don't know what's going to happen at 2, 3 o'clock in the morning. And you could use the machinery, but yeah, anything could happen for sure. So let's go to the forward tees and look at the 1-3. All right, now we're getting a long entry. It's too bad. I wanted you to see this. Maybe we'll go back. It's still short. This is not confirmed long, but it is noteworthy here. So let me draw a red one around this in case it comes back up. So the VIX triggered, and our members know this, it triggered short It's trying to go long, but it triggered short this morning at 7:25. I just want you to know that. You don't see it here now. This might fail and it might oscillate back to a short and you'll see it. And that triggered at 7:25. That VIX on Swing Machine intraday. Now, when it does that, our members know that at that point, I might want to be thinking about going long. If I've been shorting or I think the market's going to gap down, maybe it isn't. And now let me go and show you what we got going on here on the ES. Here's the 5-minute. And look at what time it goes. It was at 7:25. So the VIX went short at 7:25. You have to take my word for it. Our members are here. They know that was the case. If this fails here, we'll see it. If it confirms, it'll be gone, which is an indication that we might. Don't go jumping on this and get short just on the basis of this. You'd want to wait. But if this does confirm long, this market might pull back here this afternoon. I'm not saying it's going to fully reverse. We might see the 1 minutes pull in first. But here's the 7:25, $3,700. If you did it with a micro, 370. Mini, 3,700. 10 minis, 37 grand. How about the NQ? 7:35, 10 minutes later than that, and that signal, 7:35, $7,800. Look at this. This is the Russell, 7:30. Again, commodity money. They just pour money in. Let's just dump it in there. Pour it in. It's like pouring cement into, just pouring it in. It's kind of like you believe, when I was a kid, our house up in Boston, they used to actually deliver. Oh, okay, so this one just confirmed long. So we're not going to see it, and that we won't be on here long enough to see, but be ready. So let me now. Oh shoot, I mean to do that. Let me erase this and explain what this means. So now suddenly the VIX is now long. So I'll explain in a moment what that might mean. Don't act on it. Please don't. And then the 5-minute on the Dow was at 720. 3,500, 77, let's call that 10 grand, 13 grand, $15,000 in available profits this morning. Now, do we beat ourselves up because we didn't get all 15? No. Did you get your 100? Did you get your 500? Okay. Did you get your point, your 1,000? Okay, good. Take the rest of the day off. Don't try to get it all. Don't go crazy trying to get it all. And then not related to the VIX is long oil, 1,100, and then also long gold. Helping us stay on the right side of a fixed and rigged market. Is it rigged? Absolutely, it's rigged. Everything's rigged. I don't believe anything. And we're saying that Susan and I had to run out earlier. We were just talking to the guy. I'm like, Susan, I don't believe anything anymore. I mean, I really don't. I mean, I'm just going back like 10 years ago, 15 years ago, even. I feel so foolish. Some of my political views and some of the people I supported politically and everything. I'm like, I don't believe any of it anymore. None of it. Going forward, I'm not going to believe any of them. I believe this. I mean, do I believe in the market? Do I believe that the market is not rigged? No, the market's totally rigged. Absolutely. Do they rig the financial numbers to get the result they want? Absolutely, they do. They've been doing it for years. So let me show you now, because we're starting to see it. With the VIX being long, what are we looking for? Please don't trade this. What we're going to see the 1 minute start to dip. So I don't know if Susan's got any trades on here or not. I don't know if any of our members do. But when she sees that VIX do something like that and she's long, she's probably going to ring the cash register. She's going to say, you know what? I'm going to take that 3,600. I'm going to take the 75.31. Our real aggressive traders, they might wait for the 1 minute, and if it confirms short, they might take it. What type of trade is that going to be? A counter trade to the trend. One of those, butterfly farts in the Sahara Desert. And if you haven't heard that analogy, which I won't do here, you're like, what the hell is he talking about? What? Butterfly fart, right? Not a hurricane, but just a little butterfly fart. But it could be the start of something, right? It could be. Now, you're not going to see it because I can't stay on YouTube all afternoon at all. In fact, we'll be ending shortly. But later today, the VIX, this long VIX, it might fail. It might fail. It may go right back into a short mode and the market will continue to rally. But it's definitely noteworthy, because what could happen is the 1 minute goes into a dip, We got these two. We need this one to go into a dip. We need this one to go into a dip. That's what will happen. And then if that 1 minute fails, then they will go short. And they are at that point a counter trend. That VIX stays long, that'll be good. And then the 3 minute might go into a dip. And then the 5 minute might go into a dip. And then the 5 minutes might actually roll over. And if we punch up this afternoon, which we won't be doing, but maybe we punch up tomorrow, and I come to you and I say, do you remember when that VIX went off at 12:30 and the markets went, rolled down, could have made thousands. You have to know what to look for, and you have to know how long it takes to play out. It's not, it doesn't happen in seconds. We're not playing it that fast, and there's plenty of time, but that's how it will roll in and roll out. And you can see the selling starting to, pick in here. I'm just bringing your eyes over here to the 1 minute. You hear those dogs drinking? I don't know if you can hear that in the background. Those dogs drink more water. I tell you what, holy smokes. Incredible. Those Goldens. I have to bring the water in from the garage. I got to get some sort of a water service. I really do. I have to carry like a case of, we drink bottled water. I got to tell you, the dogs, they drink bottled water. Maybe I shouldn't do that. Maybe I shouldn't tell you that. I don't know, but they do. They drink bottled water. I'm like forever having to, they go through like tons of it. Ridiculous. Guys, thirsty, spoiled dogs. I'm not so sure about our city water, so we take good care of them. All right. Any questions here? But I'll let you watch and we'll see, I'll comment. I won't go any further, but this little long right now on the 5 minute showing up tells me that this rally that we've had here this morning and maybe from yesterday might be running its course, but I'm not going to come rushing in here and just, short it, but because it could dissipate, but it looks like it might. Make sense? You never know, right? So I'm not, also too, let me just show you over here. We're in the realm of probabilities, right? So we're always mapping out, if we're wrong, where do we exit? How do we, get off the stage? If somebody starts shooting at you, you want to know, how am I going to get off the stage? Trump didn't even want to get off. I'm going to go to the ES Renko. Here's the Renko view. Let me lose some of this writing here. Let me back this out. See if I can do this. Okay, so we've done some writing. We've been favoring the short side all week. We only had one little trade here, and it was a loser on this particular chart in what we were running, and we just didn't get any more, which is fine. Each one of these bricks is 850. If you had taken them, and if we have members that take them, and we're sure we have, this run from here to here is about $5,000. This run from here to here is, holy crap. I'm telling you, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 times 850. How much is that? It's well over 10 grand. Now, we don't have a sell signal. You might favor the long side under accumulation. And this is the old market high up here. Here is the market low that we couldn't just punch through, 51.25. We drew a Fibonacci from here to here. We know how to do that sort of thing. We drew it from here. And this was the zone, the bounce zone. We had it written up as a bounce zone that we thought that it could bounce up to. It did, but it should not have gone through it. And it did. That's a problem for anyone that was really bearish. We can ask why. We're not going to ask why. This is on the ES, but it has definitely gone through. Now, could they bump their head up here? Yeah, they could, but they could still go through it. But for anyone who is bearish, this bitch better get back down. Excuse the French, but she better get back down below 54.91 and pretty quickly. I don't see it. Don't see it. And if she comes down, finds support, she very well may make a run, believe it or not, back up to those old highs. And she could really, and if the Fed pours gas on it with the rate, so this is a very, very strong. It wasn't so strong. We had strong move down, strong move down. There was a beautiful hundreds of points, thousands of dollars to be made. A to B to C down, and then we went a little sideways. We had this little fake, this little jog that we're going to go, and it couldn't break, and then away we went, if you need to visually see it. But remember, we did the plane analogy yesterday, and we showed, you gotta be careful with reading charts, myself included. I'm not talking at you. I'm talking to myself. One of the reasons why we built these tools is, particularly when it comes to candle charts, I was really, really overreading them. I got too good. I got too educated on candles. I had Steve Neeson's book. Susan had the flashcards and like learning multiplication tables, the patterns, and she would flash them to me, and I could identify all the patterns and what they meant, and what we should do, and just want to be able to recognize them instantaneously. And it was really good for a while, but then I was just seeing. I was seeing ghosts. I was just seeing, I'm like, oh, this is kind of silly, So I kind of get away from it, and I'd rather have the machinery doing that, so I don't get overread them. So be careful yourself too, right? Whatever it might be, don't want to overread. And even we show Fibonacci. Don't get crazy with Fibonacci. Notice the dips. Notice the selling coming in. Do you see it? Let me just mark this up a little bit, right? I'll get a red, a little red marker maybe. You just watch. Let me get a red pen, right? So here's the dip. Here's the short entry. See it? See the selling coming in over here? Maybe I should do it in yellow so you can see it, right? See the selling? Now, it could be just machines trailing. Notice this one here. She's trying to short entry. Look at it. She's trying to sell down. See it coming in? Now, do we have aggressive traders? Notice we get the Russell all of a sudden. Dipping. Now, this is a trend tool. Nicholas is not a trend tool. This is a trend tool. See the sell pressure coming in on the 1 minute? See the sell pressure coming in? Now, we got aggressive traders that like to take counter trades, and they're like, you know what, Don, I'm not going to wait. All right, so now look what happened here. All right, on the 1 minute, it just confirms short. But what type of trade is that? It's a counter trend to the 5. It might fail. It most likely will fail, right? The probability is that it will fail. But could you make $300, $400, $500? Maybe a little bit more. Our traders, we have aggressive traders that will try to do that. Um, what they don't know is, and what is always seductive about this sort of thing is it may be in the beginning a counter, but as I mentioned, then the 3 minute might fail and then the 5 minute might fail. And they might work their way in. But they're very adept at doing it. They've got other tools on their desktop, but you're actually seeing it, which is kind of cool. I didn't know it was going to happen real time here. Um, Let me remove some of this writing. So this is now the 1 minute is now short. The NQ 2 minute is now short, confirmed. YM is now short. Now, if you're trading the NQ at this time of the day, how much money do you need in your account? I mean, you're using $1,950 of capital. But if all you have is $2,500 in there, you shouldn't be trading it. You don't have enough. You'll be too stressed. Should only be trading, at most they might, well, the smallest would be a micro. So if these numbers, are too big, you're probably trading too big in your account, and you want to size down. You don't want to be trading such a size that is so small that you don't care about the money, but you don't want to be trading such a size, and I'm talking about size margin, where you really are stressed about the money. You can't be making, I don't want to talk at anybody here, talking to myself, right? But we've already been through all this. I would say this to Susie. You can't be trading the money. You can't be trading the money. Make sense? I hope so. Um, Let me, I mentioned, back years ago, I had Susie, we were trying to, develop these tools and get in, and Susan saw something. She got in the trade. She saw something like, oh, Donnie, it's going to go against. I better get out. I'm down so much money, 300. And I'm like, no, you can't get out. You got to follow the rule. No, no, no. I want to get out. And I'm like, no, you got to follow the rule. And we lost like $300. You know, Nobody wants to lose, but and Susan, I can't believe you made me do that. Just got really upset with me and got really upset. Um, Susie, let's stop for a minute. Let's just talk about this. Um, you can't, if you're going to be making decisions on the money, which is greed and fear, you're not going to be doing this very long. You just got, and it's going to be, you're going to have a hard way. It's just a lousy way to go. Um, and I can just describe it and I can mention it, but we hopefully have a tool set and an approach that can help you get over it. And a lot of those tools and a lot of that approach came from, helping Susie overcome that. And I had to think it through, really, got underway. And then, of course, working with others as well. But again, if you get in there and you put the trade on, you're like, okay, oh boy, I'm down $140. Oh boy, oh man, okay, I'm up. All right, I better take that money. Oh, this one over here, that's not what we're doing, right? You just take a deep breath and, all right. So we'll let you watch for a little bit. Any questions, let me know. I'll be here. And I'm glad you kind of got to see a little counter trend. So in 6 minutes, it's 125, 130. And if we have members that came in and if they make three, four, $500, they might choose to take their money. We might have more aggressive traders looking at a little something different, saying, you know what, maybe the 5 minute is now dipping here. You know what? Maybe I get the start of something. So maybe I'll give it a little bit more room to breathe, and see if I can get into a 5 minute sell down. If it does sell down over here, if we do sell down, it will trigger. It will trigger the order. We'll let you watch. 7 minutes, 2.25, 6 minutes. There's 400, but you did have a little bit of a draw, 150, it's not without draw. So the 1 minute is going on the ES, the 1 minute is going on the NQ, the 1 minute on the Dow has just turned down. Does that mean the 3 is going to go and the 5 is going to go? It might, but I can't know for sure, right? Any questions? Let us know. If I'm an option trader, if I'm an option trader and I say, Don, I'm at, I tend to agree. I think I'm at a real good resistance area here on a daily basis, or not really a daily, but from that high to low, that resistance area, I'm right in there. Um, maybe for folks who have option skill, maybe this is a pretty decent place. I'm not suggesting you do that, but maybe, and say, okay, I can see the market kind of weakening here a little bit. It's not to say it doesn't come roaring back in another hour. It very well could, but maybe at this 55, 54 area, you could have to, look at the SPY or the S&P to get the exact price. But what we would want to see for those of us that think that we're bearish, what I'd like to see, all right, so the 1 minute is 10 minutes short, 9 minutes short, 3 minutes short, 9 minutes short. Okay. That's a counter trend to the 5 because the 5 is long. 5 is long, 5 is long, 5 is long. What I don't know is this the start of something? Now, everything's relative. If you were trading, daily in 1 hour, maybe you're trading the 1 hour in the direction of the daily. Maybe you're trading the daily in the direction of the weekly. That sort of schematic. You don't want to be trading the 1 and the 5 based on what the daily is. That doesn't matter. It's too far away. And so we'll see what happens here. And it could be just the middle of the day. They're at lunch, they hand the reins over to the kids, and they're out eating a big steak someplace, and they come back and start, buying the market up again. But the VIX went along, 5 minute at 12:30, and that was the indication we saw it real time that this market might pull in. So at minimum, if you had been long and you had swing machine, you've been long, and though you had a bunch of options and you see the VIX do it on a 5 minute, maybe you want to make it 10 minute, and you see that happen, then kill your positions, take your money. Oops, there's Amazon, not to our house, but somebody's getting every day. I got to give treats to the Amazon guy to get her to stop barking. I just share with everybody, and we're very serious about this. I try to treat folks the way that I would want to be treated, although not many people do, or others. When you join Stock Market Caddy at whatever price it is for the monthly or the annual, we make a commitment that you'll never pay more, right? So the price never goes up. We try to add more and more value to each, category. Not only on the annual side of things, you may have heard me mention is that the first year there's a big commitment there because you do have to go through the Q school, and but that's a one-time thing. And then um, um, when you go, hopefully, to join the second year, the cost drops to 3,500, and we give you 1 month free for the first year, a reward, and 1 month free for your forward year. So by year five, at today's prevailing, where we are today, if someone was to join today, and the annual is 3,500 on that second year, if you're with us for 5 years, you're going to get 5 months free for the 5 years you've been with us, and you're going to get a 1 month free for the forward year, 6 months, and we cap it there. But the effective that reduces the effective rate from 3,500 to 1,750. So not many other people or other things or businesses, and Stock Market Caddy is a business now of itself, but we love doing it. But the 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 cost is going down as you extend out, and we're increasing hopefully the value. And we think that's a good way to go. You're going to hopefully become more and more independent. But not everyone makes it. And I can't know what that is. But we do have a very high retention level. Retention level at the monthly level is at about 90, 89 to 90%. It stays very, very high, which is great. It's how we kind of grade ourselves, on that level. Our trading is profit factor, but I grade our performance on Stock Market Caddy on our retention. And the annual retention, I'd like to see it higher, but it's at about 70 to 75%. I'd like to see it higher. But sometimes folks will find out, when you're at an annual membership, not all, but most are trying to trade, intraday. Some are using it though as a management tool for their retirement accounts and whatnot. And but most are trying to trade intraday. And there's some, there are some you know, things you have to work through. And so we hopefully would give you the tools to at least make you aware of what those things are. And if we have any members listening, sometimes they do, always know that I'm available. I won't intrude, right? Though I don't, we do send out emails. You see some of that. We're just trying to inspire and not annoy anyone, especially not members. And but I won't intrude. Like if a member, we don't talk for a period of time, please know that it's not because I'm not interested. I'm keenly interested. I want you to do well, but I don't want to intrude. I don't want to why aren't you around, or why aren't you doing, um, trading in the markets, hopefully is a business for you, and you come at it when you come at it, and just know that as members, we're interested in trying to help you think some things through at any point. We want you to be here for the long haul. And there's a gentleman, we don't talk nearly enough, but he's busy and he's in Germany, and he's been with us now. It's hard to, it's well over 6 years. And just 2 to 3 weeks ago, he's the gentleman who had a profit factor of 80 in 1 week. I don't know what his profit factor was 2 or 3 weeks ago, but it had to be better because he said, Don, I just had the best week of ever, ever. So when you have a profit factor of 80 in a week, 80, and you lose $100, you make 8 grand. If you lost 1,000, you made 80 grand. It can be done. And we use the words robot assisted. Maybe another word, maybe a better word would be autonomous, trading. Um, you can have autonomous driving. You can have autonomous, plane flying. You can have autonomous a lot of things, but or even autonomous, surgery. But you need to have acquired skill in that autonomous field, right? Um, you have to be able to work with the machines and have that skill set. I'm not trying to give anyone the impression that you can just, plug something in short periods of time. And that periods of time could be hours, could be days, could be weeks, right? I mean, we can come, again, and we can, oh, I mean to do that. We put this on a 60-minute, ready? 60-minute. If you took that trade 119 hours ago, you're up 11,000. On a 60-minute, this little pullback isn't even registering anything. It's not even registering. But if you're watching your money and trying to make a decision off the money, then, that wouldn't, you know, that isn't a good thing. You don't want to do that, but, that's how much you would be up. Um, if you're on the 60-minute here, 119, you're up 22 grand. So if you traded the hourly on the 60-minute, 11,000, you're up 32,000. However, the next hourly short, just to walk you through this, it may only last a couple of hours. And you may have a chance, or maybe a person took the 60-minute and they made $1,000 and they've been sitting out waiting for the next signal. Like, crap, I only made 1,000. I could have made 12,000. Crap, I made 1,000. I could have made 22,000. But you can't beat yourself up over that. You do what you do, but in time, you learn to get a little bit more and more proficient and get a little bit more of the pie, right? I'm going to have to break for a few minutes, but because the market's doing what it's doing, I'm going to let you watch, and then I'll try to come back probably close to 1:30, and I'll answer any questions. Then we'll have to sign off and see where they want to put their heads and where they want to go. Maybe some zero DTEs on the dark side might be interesting. Maybe we dump between now. Maybe, right? We'll be here. Have fun. Okay, everyone. As you can see, and I wasn't here, but the short signals failed as we would expect them to fail. So, there was an opportunity to make a little bit of monies. And when we teach you how to trade swing machine during the Q school, think about it like playing golf. You've got to learn how to just chip the ball, chip, just to make contact. And but this has a greater likelihood of succeeding in the direction of the five. These, the only thing that gives me a little bit of pause is this VIX up here. She's still trying to trend along. So there may be yet another attempt to try to sell down. There might be. So again, it takes practice, patience, an understanding of what you're trying to do. And when you're trying to learn how to play golf, you've got to go to a little, a small green and just chip the ball, chip the ball, chip the ball over and over and over, working on a putting stroke. You start out small, and then you back up to 110 yards, 120 yards, 150 yards, and your swing will get a little bit longer, and you get to learn, um, and you back up. What you don't do is, go out to the golf course without any practice or any instruction, and then just break out your driver and think you're going to slap the ball around, and you're going to get a $3,000 trade. It's not likely because if you're the moment you're up, 700 or 800 or 1200 or whatever the level is that can trigger your emotions, you start to get emotional and you start to get in the way. And so you have to start out small and you have to do it over and over and over again to the point where trading becomes um, rather routine, becomes robotic, right? We don't want any emotion. We talked about the four different types of trade. Let me just share with you this. Everybody starts out trading in this box. What is that box? They are discretionary traders. And you might be in this box now. Everybody starts here. And it's important to be a good discretionary trader. We'll just say trader. And there are skills to be learned. Some learn them, some don't. Most don't. You know, just get a book on candles and think that's going to work, or chase moving averages around and okay, and then a stochastic, and it doesn't work. And they're trying to trade what they see, what they hear, what they think, and it runs its course. They don't do very well, and then they start looking for a guru. That's not me. I don't present myself as a market guru, to hand out the fish. But people will start looking for someone like that. Maybe the hockey captain up in Connecticut or some other guy, and he's going to hand you some trades and then some will hit, some won't, and it'll just run its course. But it is important to have good discretionary skills. We think we have them. We try to teach you those, and this is fine for the person who's trading, maybe, a little bit a year or a few times a month, maybe a little bit around the edges. Where this breaks down is when the person gets overly confident. They got one big trade on Apple, one big trade on Tesla. They got a big block of money now, and they got lucky on one. And now they think, okay, well, you know what? I'm going to quit my job and I'm going to start trading intraday and I'm going to do the same thing. And they don't do well. The reason why they don't do well is they really didn't have much game. And what we're going to try to do during your Q school is get you to think about your trading in this fashion, in this box. And what's that box? That box is what we call mechanical. Oops. Mechanical trading. What do you mean by that, Don? Well, um, when you're learning how to play golf, they'll teach you the proper grip, the stance, posture, the takeaway, mechanics of hitting the golf ball. And in the beginning, it may feel mechanical, look mechanical. It is mechanical. And you need to work and practice at it. And that might be giving you instruction 2 or 3 days worth on how to trade swing machine. It isn't as simple as just, we present it simple, but it isn't just as simple. If you're out there in YouTube land thinking, oh, I just put on a 1 minute and I lost 100, or I made 100, or, wow, that's the wrong takeaway. That's not what we're trying to show you, right? It takes time because there are many different techniques, even trading just swing machine. There are 3+ weeks of techniques to trade other things. And we want to peel that back. But when you're mechanically trading, you are putting the trade on and you are taking the trade off. Learning to do that. Learning to do it with zero tolerance for negative outliers. Learning to do it without the emotions of fear and greed. Disciplined, not with rules written down on a legal pad, but hard-baked rules using technology so that you can repeat it. Once you become very, very good here, then we have waiting for you. And maybe you're using some of the tools here that you're shadowing, but then we're going to try to move you into this box. What's that box? That box is robot assisted trading, or you might say autonomous. Autonomous? That don't look great. Autonomous, but close enough. Again, I don't know what's happened to my spelling. Autonomous. Looks all right, maybe. Autonomous. Um, Here, what's the difference? Here, the robot or the machine is making a decision to enter, making a decision to exit. And doing so, water brokerages won't even let you do it. They just won't allow it. You got to find yourself another brokerage, maybe like TradeStation. They don't trust you. And they want you staying in here. But I don't want you to give you the idea that, just it's going to automatically vacuum up money. At times it may feel like that, and it may appear to be that, but there are other times not so much. What we're going to try to do during Q School is we're going to spend time here, and then we're going to try to move you in this direction here. And then we're going to get you trading. Yep. And we're going to ask you during the Q School to trade in simulation. We are going to ask you to do that. And if you are following anyone or anyone says to you, what a waste of time that is, because you don't feel the sickness in your belly that you need to feel when you're trading with real money, you need to get away from those people because they don't know what they're talking about. That's absurd. The machinery today is so good that simulation is identical to real trading. The only difference being is what's between your ears. And that is what has to be overcome. And you can do that and work on that in simulation as well. We have very specific steps in overcoming that. But if you think, I want to take a flight from Tampa to San Francisco and land in San Francisco in the fog at night, and you think I want that pilot to feel a sickness in his belly because, he's never done a flight simulator, You're nuts. I hope he's trained and been in a flight simulator, thousands of times to the point where, it's no big deal to him. That's what you're going to have to do. It's going to take time. It's going to take patience. It may take a few days. It may take a few weeks. It may take a few months. It may take you a few years. Everyone's different. Some are fearful of money. Um, some are fearful, greed. Um, they count on that. You've got to park it. We don't, I've never, for whatever reasons, I don't know, just not, um, I'm just not a greedy person by nature, and I'm not fearful of money. My older brother would say at times when he would beat me at something on the golf round, and I'd have to pay up. Don't worry about it, brother. You come into the world bare ass, you go out bare ass. Kind of good advice. Um, I just never did. Susan was pretty fearful, pretty fearful. Had no reason to be, over 300 bucks, but would be. Logan, one of our members, he said, Don, do you remember how fearful I was over 200 or 300 bucks? He goes, do you know in the last year trading Ethereum, I've had several trades that are in the hundreds of thousands of dollars. I never even bat an eyelash. He got himself there. We instructed on how you want to go about doing it, and then you just got to do it. Got to do it. You got a fear of public speaking. You're not going to learn to public speak unless you have someone show you how, map it out, and then you got to get up there and you got to start talking. You know, I had a fear of public speaking. I absolutely did. What a debilitating thing it was because I was a salesperson for Johnson & Johnson actually, and it was crazy. I didn't have a problem speaking in front of 200 or 300 nurses. Nope, no problem. I could get up and speak in front of a general surgery group at Baptist Hospital in Miami. 50 general surgeons get up there and give a presentation on something. Not a problem. But then they would ask me, J&J did, to get in front of my peers. Because they were grooming me a little bit. And I wasn't very comfortable. And I couldn't figure out why. I was like, what's going on? Why? Maybe because I don't know, your head plays games. Maybe I didn't, have the confidence. Maybe I thought that they, I don't know, that they had better skills at what they were doing and I didn't have, and so um and J&J picked up on that. The little bastards. They said, Don, we're gonna have to work on that. And so we're gonna send you to NYU for 3 or 4 days, New York University for 3 or 4 days on public speaking, because we're going to need you to be comfortable in front of not just your peers, but in front of the company people, because we want you to be, we want you to have a good career. And I didn't know what to expect. And this professor and I went with some other young people that were being asked to do the same thing, because guess what? I wasn't alone. There were some others. And they started to teach us how to speak publicly and the different tricks. And I'm like, is that how they do it? To make you more comfortable. And then once they started to do it, then they couldn't shut me up. I love to do it, but you have to do it. But I didn't know what I didn't know. And I was grateful that somebody in that case, and J&J is a wonderful, wonderful company, spent a lot of money on us, on our education, in all kinds of ways. But we're not going to be doing public speaking, but we're going to try to make you aware of what you need to do to be a good discretionary trader. But then we're going to try to move you into mechanical trading. And then you become really, really good here. And then we're going to begin to use technology to help you with robotic trading. robot assisted trading. But notice this arrow goes both ways because the robot could put you in the trade, it could take you out of the trade, or maybe you take it out. You can go live in here back and forth. And most of our members live back in between these two groups. It's very, very empowering. It's very liberating. It is almost would be the word meditative. It's very quiet. It's really neat. And then the last box, which we need to show, and maybe we do this next week, is robotic hedging. Nicholas does that. Nicholas is a robotic hedging tool. And by the way, this arrow can go both ways. And in this box, and it's robotic hedging. And in robotic hedging, we're trading robotic hedging. We're trading multiple markets, multiple time frames, multiple, and we're hedging our bets. And so we could be both long and short in the same market or comparable markets, and the reason why we're doing that is we're trying to smooth out the volatility in our account. And it's at this place in time you become your own hedge fund. You may be not managing other people's money, and we're not, right? We got some family accounts that we do for family, but we don't publicly, right? So we're not running afoul of any regulations. We just do our own, but we're just giving you a mental picture of where you're going. Now, the catch is everybody wants to do this and or this, but there's no jumping the shark. You can't do this unless you're good at this, and you can't do this unless you're really good at this, and you can't do this unless you're proficient at that. So I really do appreciate, and we get every single day, we'll do some YouTubes and people will visit the website, and presumably it's spelled out. I try to spell it all out on the website, and somebody will send me a message. And if it was you, thank you for the message, but it'll be something like, hey, Bagger, how much is that bot for robot? How much is that bot? And I don't even respond because either they haven't listened or they haven't understood, or I haven't communicated well, but they still don't know what they don't know. And none of our bots individually are for sale. Nope. Because if I sold the bots individually, with it would come this expectation that, that you can jump the shark and just plug in a robot and it's going to vacuum up money. No, I'm telling you now, it isn't going to happen with us. To the extent that you want, anyways, I'll put it that way. And it's not going to happen with anyone else either. And if you're being presented with that, good luck. More valuable than any of our robots, and we have robots, and we have mechanical trading systems and approaches. We have quite a few, but the invaluable part is the education of how to do this, and how to get to here. And then we lay it out during a 3-week period, day by day. And then you'll get to decide what you want to do. You can become an annual member or not. And then you get underway. And you either get serious about what you're doing or you don't. I can't do it for you. We have too many members. We have our own trading to do. And so we don't trade for you, and we don't hand out the fish. And you've got to get serious about it. And, I went through a lot of training when I was at Johnson & Johnson. It was a very, very good company. It wasn't the only company I worked for, but they were extremely good. And I spent quite a bit of my life there. And I also was in a position to hire people, to train people, and then hire people. And, you don't, at Stock Market Caddy, I'm not hiring anybody. You don't work for me. We're, teaching folks how to trade for yourselves. Granted, at J&J, they may have been working, for the company. They weren't working for me necessarily. May have hired them, but even still, the way I trained people and the way I approach was, hey, it's up to you. You know, it's up to you. And give you a for instance, I can remember one time, and I'm kind of jumping gears a little bit, but I had a young fella I picked up at the airport. Actually, a young fella. He was older than me, and he had to spend 3 or 4 weeks with me in the field, going into surgery and everything. And he showed up, and I picked him up at the hotel. And at the time, we didn't have cell phone. Well, yeah, I don't know if we may have had cell phones, but we had these things called day timers. A calendar, to keep a thing, and you'd have a notebook or something. No day timer, no nothing. I'm like, what are we doing? Like, what do you mean? I'm like, where's your day timer? I don't have one. Oh, where's your notepad? I don't have one. I'm like, what are you doing? I mean, you're here to learn, right? What are you going to write with? I don't have it. I'm like, okay. That was day one. Okay. All right. I'm going to pull in. I just pulled into a Walmart parking lot. I said, I'll wait for you. I said, we got a little bit of time. Go in there and buy yourself a day timer and go in and get a notebook and a pen. I said, because you're here to learn and you got to start learning. He didn't particularly like it. He got through the training, but he didn't last too long. He didn't have any, as it turned out, which was a warning sign, actually, he didn't have any self-initiative. He was smarter than me. He was actually too smart, you know. He was too smart to need a day timer. He's like, these aren't my appointments. I don't need any notes. You know, you know. Like I say, he flushed out. He washed out. You've got to set yourself up. Everyone is coming from with different experiences, um, very successful backgrounds. We're going to lay out our approach. You've got to adapt, from your experiences, your education, and take the information and assemble it. I'm not going to day by day, strategy by strategy, market by market, stock by stock, option by option, and try to hand out the fish like the Nigerians do. And whoa, five bagger, woo, yeah, let me show you some, girls in bikinis. Yeah, come on down to Miami and party with us. And I mean, if that's what you want to do, have at it, join them, and have a good time. But that's not us. Okay. I don't have time for it. I'm not, if I want to go to Miami, I'm going to go with Susie. I'm going to go to the Keys and we're going to have a great time. And, but um, that's not us. So if you want to learn how this is done and you want to get out of this box and you want to get into here and start moving here where our members are, and is David here? Maybe he isn't, but he might be. We just had a gentleman in Germany who's been with us over 6 years, several years, and had his biggest week ever just a couple of weeks ago. Now he's had weeks with profit factors of over 80. So when he tells me that he's just had his biggest week over, he had a very, very big week. Okay. His effective annual cost for stock market caddy and all the tools that were built, we didn't have them all. We're probably more than doubled, more than that from when he first joined, is 1750, 1,750 bucks. That's great. He's very, very independent. We give you 1 month free for every year you've been with us up to 6 years, and in effect, can cut that cost, the effective cost, in half. If you stay with us continuously, you gotta stay with us continuously, because if you take a break for a couple of years and come back, we have to delete all your programs and you have to start over again, and we got to start over again, and it just takes more time. But if you keep moving forward, like David in Germany, and you become very, very independent, you're in a beautiful place, and it works, and it is a great, great thing. And we learn a lot from David. We learn a lot from everyone. So I didn't expect to go there, but I just wanted to kind of back up a little bit And let's go take a look at swing. I know you guys want to see the market, and now let's go take a peek where we are. And they're still running. And if you had taken the 1 minute in the direction, now the 5 minute is the 5 minute. So it's been long since 725. It's oscillated, but you're up 3,700. The NQ has been long since 730, 725. 735 is 8 grand. 730 is 3,200. 720, 2 grand on the Dow. Oil's trying to get short right now on the 5 minute at 150, trying to turn down. The oil markets are closing. Gold is trying to get long maybe here on the 5 minute, but oscillating. If you took the 1 minute long 31 minutes ago, you're up 300 in the direction of the five, which is always a good thing. If you took the 1 minute long on the NQ, which is what we teach, right? We'll teach you how to trade the 1 minute and the five, because that's like chipping golf balls. Just boom, boom, boom. Just, we just got to get you trading, and making good contact, good posture, good grip, and if you had picked off that little trade 32 minutes ago, you're up $800. There are things that you can do with that. You've got to get away from just, bang, I'm taking it, that we're not doing. But there are things that you want to do so that you don't let, these turn into losers. And even on the Russell, 38 minutes, 130, that sort of thing. That makes sense. All right. Good to see you, Raul. Good morning or good afternoon. And Darian, um, we're going to have to sign off. But if you see the market turn down later today or tonight, or maybe it keeps running through tomorrow, we're going to have a really good view. And our members will have a really good view. You'll have what you have. And if you're getting it done with whatever it is you have, keep doing it. But just remember, right? It's a lot easier to learn a good habit from a flat position or from not knowing something. So the gentleman who is one of our biggest successes, Logan, he was fabulously successful. He was very successful at futures, and then he adapted it and got very, very successful trading Ethereum. But when he called and said, Don, I've never traded anything, nothing. And I want to learn and I want to know what you know before I do. And that was actually kind of the start, because it was back years ago. We didn't have everything that we had, and I didn't quite expect that. What a pretty mature phone call, though, right? And what a mature perspective. Don't always get that. Don't always get that. Um, and you don't want to you don't want to learn how to drive the Lamborghini after you crash the Lamborghini and do a lot of damage, right? It becomes more difficult because that accident, can stay with you, mentally. It can be a problem. So it can be more difficult to learn a new approach, or to learn a good habit over a bad habit. It's better just to learn the good habit in the beginning. And I think that's the case with just about everything. But then again, like I say, you want to go to the Caribbean, you want to take a little dive lesson in the pool, and then go out with the kids on the rowboat and go diving, have at it. I'm not taking my beautiful Susan down in under the water doing that. That ain't happening. And I wasn't about to give Susan um, our capital to trade either. Like, okay, Donnie, I'm ready. Not quite. No, you're not. No, you're not. And set her up her sim accounts. Told the story, let her go at it for months at a time. Almost got there. She set up. She's like, I think I'm going to be over my number. I get started, Don. Like, okay. And then that night, before the next day, I went in and I took out, I knocked her sim account down. And I just sat in the office and I waited to hear a howl. What? What? What happened? Donnie, what happened? I swear I was. She was trying to get to a target. I said, Susie, relax. I said, I just knocked a hole in your account. Why would you do that? It was really, she was pissed. She had taken it so seriously and it was good. I wanted her to take it seriously. I said, consider that you had a negative outlier, even though I know you don't. Consider you did, or consider that you had to transfer money out to pay, I don't know, you know, um, maybe you had a hole in the roof or something. You gotta, fix something. Just pretend you did that. I know you were targeting an amount, but now you got a hole. I need you to see how you react. You got to go back and plow through that ground again. I know you felt like you plowed it, like you were going to trade because of what you got to guard against is you're not going to go from high to high to high to high. It's not going to happen. If you can't pick the perfect high and the perfect low, your account is not going to go from high to high to high to high. So if you're trying to do that, you're just going to it's going to eat you alive. So I said, just go back at it and dig it out. And she did. She dug it out. And I'm like, okay, that's fine. Now I'll fund you. And then we just never look back. Trade's entirely different than me. And as you would imagine, she doesn't take the risk. It's different. And that's okay. Right. So if we were in a best ball tournament, Susan's going to put the ball in the fairway. I'm occasionally going to probably, yank one or two or three. I'm going to try to drive the green or something, and I'm going to put one, in the woods occasionally, but I get myself back out and into play. And she'll say, why the hell would you do that? You could have, you could have, whatever, you could have just taken it. So it's a different trading personality. You'll have yours. I have mine. Susan has hers. We're going to learn yours, but we're going to try to expose what is available to you and then give you the format and the scheme. Then you got to go implement it. You got to do it. And as I said to the gentleman that that I was training at J&J, and he was like one of the first ones. I said, buddy, I'm going to spend time here with you, but you're going to have to go back home and you're going to have to do this. And we got the same boss, by the way. We had the same boss. And I said it, and if you don't get it done, this guy who was my boss, he was a former major in the Marines. I said, he will fire your ass. And he did. Some months later. Any case, so you don't work for me. You don't want to work for me. You don't want to work for anybody. It's your money. It's your time. I don't want to work for anybody. I don't want to have to travel. I don't want to have to be on a conference call. I don't have to. And fortunately, you have somebody here that's willing to do that. I don't know of anybody online that is doing what we're doing and will spend that time, the quality time that we're prepared to spend with you. So you're welcome to look and nose around. I just don't see it. And there are some local agencies, you could see them. They're national. There's a national concern. You spend a week with them in a classroom of about 30 yahoos. I've seen it. I watched it. I didn't go there, but I didn't take the class, but I went to see, because at one time I wasn't sure if I was going to teach Susan years ago or I was going to let them do it. And then I said, I got to go look. And then I didn't like what I saw. I didn't want Susan to be wasting time sitting in a class with 30 other yahoos, talking smack. But they charge $13,000 a week, 1 week, to learn how to trade stocks. 13,000. This is what it was. So it may be up to 15 now. $13,000 a week to learn how to trade options. $13,000 a week to learn how to trade Forex. $13,000 a week to learn futures. And you're up over 50,000, and they'll cut you a deal for for the 5 weeks for 40 grand. We're going to trade stocks. We're going to trade options. We're going to trade futures. I don't trade Forex. I probably should, but I don't. you could certainly adapt it and trade Forex. And on top of that, you're going to get a whole host of tools. And with them, you ain't going to get shit. But they're out there. That's about the only one. And with that, it's 2 o'clock. We've been up for 2 hours. I'm going to let you all go. I thought you would want to see things. And we will punch up tomorrow, probably briefly. It'll be an hour, no more than an hour. This one we let, I was hoping that maybe we could see it run down. 41 minutes, 412, 41 minutes. Notice 41 minutes. There's 900. There's $1,500 in those two markets. The Russell is struggling. Russell is that, doesn't use as much margin. It's a little bit, it is what it is. It's just, this is the crazy aunt in the basement. This is more staid. This is very staid, the Dow. I don't trade the Dow a whole lot. Susan likes to, and then his oil and gold. They haven't done much. All right, I'll wait a couple of minutes. If you got any questions, let us know. And I'll wait, and then we'll need to sign off. You let me know if there's any questions, and I'll come back.
May it be an evening star shines down upon you. May it be when darkness falls, your heart will be true. You walk a lonely road. Oh, how far you are from home. Morning air, may it be the shadows call will fly away. May it be you journey on to light the day. When the night is overcome, you may rise to find the sun. Morning air, believe and you will
Okay, everyone, we wish you the best. Thanks for stopping by. We hope you have a good rest of the day, rest of the week. If you want to stop by tomorrow, feel free. We'll see where they want to put their heads come this weekend. And we wish you the best. Have fun.